Is it a good time to invest? That's the million-dollar question on every investor's mind. Is now a good time to invest? With market volatility, economic uncertainties, and conflicting expert opinions, it's a question that's more relevant than ever. Well, welcome back to our channel. I'm Dave Seymour, and today we're tracking that crucial question head on. We'll dive into current market conditions, explore different investment options, and provide you with the tools to make an informed decision. But first, let's address the elephant in the room. There's no one-size-fits-all to this question. The right time to invest depends on your individual financial situation, goals, and risk tolerance. That said, there are certainly factors we can analyze to help guide your decision. Well, let's start by breaking down the current economic landscape. Currently, we're in a unique economic environment. We've seen record-breaking market highs, followed by significant corrections. Interest rates have fluctuated, inflation has been a concern, and global events continue to impact markets worldwide. But here's a crucial point to remember. The economy is not the stock market, and the stock market is not the economy. They're related, but they don't always move in lockstep. With that in mind, let's dive into the current state of various investment markets and the factors you should consider. Stock markets. The stock market's been on a wild ride in recent years, and the sharp downturn in early 2020 due to the COVID-19 pandemic, we saw a remarkable recovery and a bull run. However, 2022 and 23 brought increased volatility with concerns about inflation, interest rates, and global conflicts causing significant market swings. Today, the market has shown resilience, but uncertainty remains. Tech stocks, which led much of the previous bull run, have faced increased scrutiny and volatility. Meanwhile, value stocks and dividend-paying companies have gained attention from investors seeking stability. One key point to note is that market timing is notoriously difficult, even for professional investors. Historically, time in the market has beaten timing the market. According to a study by Putnam Investments, missing just the 10 days or the 10 best days in the market over a 15-year period would cut returns almost in half compared to staying fully invested. So, is it a good time to invest in stocks? If you have a long-term investment horizon and can tolerate some volatility, historical data suggests that investing in a diversified portfolio of stocks has been a sound strategy regardless of current market conditions. Real estate. The real estate market has also seen significant changes. The pandemic shifted housing preferences, with many people seeking more space for remote work and moving away from urban centers. Now, this led to booming markets in suburban and rural areas. Today, we're seeing a more balanced market in many areas. Interest rates stabilized after a period of increase, which cooled the market somewhat. However, the housing supply remains tight in many areas, which supports home values. Commercial real estate has faced challenges, particularly in the office sector, as remote work trends have persisted. However, industrial and logistics properties have performed well, driven by e-commerce growth. So, is it a good time to invest in real estate? Again, it depends on your specific circumstances and local market conditions. Real estate can offer benefits like passive income and potential appreciation, but also comes with responsibilities and risks. Due diligence is, as always, crucial. Bond markets. Interest rate changes have significantly impacted the bond market. After a long period of historically low rates, we've seen increases aimed at combating inflation. This has led to challenges for existing bondholders as bond prices move inversely to interest rates. However, higher rates also mean that new bonds offer more attractive yields than we've seen in many years. This could provide opportunities for income-focused investors. Is it a good time to invest in bonds? Bonds can play a crucial role in portfolio diversification and income generation. The current higher yield environment may be attractive, but it's important to consider your overall investment strategy and risk tolerance. Alternative investments. Beyond stocks, real estate, and bonds, there's a world of alternative investments to consider. This includes things like commodities, cryptocurrencies, private equity, and more. we've seen increased interest in alternative investments as investors seek diversification and potential hedges against inflation. However, many of these investments come with higher risk and less regulatory oversight. Is it a good time to invest in alternatives? These investments can play a role in a diversified portfolio, but often require specialized knowledge and a higher risk tolerance. They're not suitable for all investors. Now that we've covered the current state of various investment markets, let's address some key principles that can help you decide if it's a good time for you to invest. Your financial foundation. Before considering any investments, having your financial basics in order is crucial. This means having an emergency fund covering maybe 3 to 6 months of expenses, paying off high interest debt, maximizing any employer match on retirement accounts. If you have these bases covered, you're in a better position to start investing or increase your investments. Your investment timeline. Your investment horizon is crucial in determining whether now is a good time to invest. Short-term market fluctuations matter less if you're investing for a long-term goal like retirement. You have time to ride out volatility and potentially benefit from long-term market growth. Now, on the other hand, if you need the money in the short term, say less than 5 years, investing in volatile assets like stocks may not be appropriate, regardless of current market conditions. Your risk tolerance. How well can you handle ups and downs in the market? If market volatility keeps you up at night, it might be worth considering more conservative investments, even if it means potentially lower returns. Remember, the best investment strategy is one that you can stick to through good and bad times. There's no point in investing in a way that causes you excessive stress or might lead you to panic sell during a downturn. Dollar cost averaging. Consider dollar cost averaging if you're unsure about investing a large sum at once. This involves investing a fixed amount at regular intervals, regardless of market conditions. This approach can help mitigate the risk of investing a large amount at a market peak. Diversification. Regardless of market conditions, diversification remains a key principle to sound investing. By spreading your investments across different asset classes, sectors, and geographic regions, you can potentially reduce risk and smooth out returns over time. Your knowledge and experience. Invest in what you understand. If you don't feel confident in your knowledge of a particular investment, it's okay to hold off until you've done more research or consulted with a financial advisor. So, is it a good time to invest? Well, as you've seen, the answer depends on various factors, many of which are personal to your situation. Remember, investing is a personal journey. What works for one person may not be right for another. It's always a good idea to consult with a financial advisor who can provide personalized advice based on your specific situation. We've covered a lot of ground today, and we want to hear from you. What's your take on the current investment landscape? Are you planning to increase your investments, hold steady, or wait for different conditions? Share your thoughts in the comments below. If you found this video helpful, please give it a thumbs up, subscribe to our channel for more insights on investing and personal finance. Don't forget to hit that notification bell so you never miss an upload. Until next time, here's to making informed investment decisions and working towards your financial goals.